So it is Thursday, and Thursday of a long weekend, which is interesting, as in Thursday, we had Monday off. So natural gas stays at 10:30s on Thursdays.
Right.
Oil, usually Wednesday at 10:30, gets actually pushed back. So we're going to get oil numbers at 11 a.m. Eastern time.
Right.
But we'll take a look at, we're going to go into natural gas. We're going to jump around here. We'll start maybe with our noon spread. So we're looking at the October contract. You got natural gas trading about 278 right now. A little bit of volatility, nothing too dramatic in terms of, we're talking about
pennies,
a penny and a half, you know, really, right? From 278 to about just over 279.5. So starting off with the noon spreads, we like to set up maybe a volatility trade here. Look for a spread to the bullish side, spread to the bearish side. What's happening here is that we're trading at 278.4. The spreads are going to start at 280. So what's important to notice is that if you're buying a spread to the bullish side, you'd have exposure from 280 to 3. You're selling a spread to the bearish side, you have exposure from 280 to 260. It's important to notice you have over a penny and a half of intrinsic value on the negative side. So this takes on a little bit of a bearish bias trade. And you'll see that. So you're selling this is going to cost you $22 on the bearish side, right? And about 15 of that, call it, is intrinsic value, which is a penny and a half. And then the rest, you're paying 7/10 of a penny about in premium. And then on the bullish side, identical premium, no intrinsic value, right? So you're looking at about $30, which would be 3 pennies you would need from 280. So that's where you begin to realize that, okay, so on the downside, my break-even's 277. On the upside, it's 283.
Right.
I'm a penny and a half away from breaking even on the downside. I'm 4.5 pennies from breaking even on the upside, and that's why it's important to realize, you know, those bearish bias, bullish bias. Hey, if you're thinking, you know what, I think it might pop downside, I think it might just have huge volatility, that's a nice setup, but just be aware that this is an easier trade to make money on if the market moves to the negative side.
Right.
You know,
and
so
what we normally like, well, not normally, what we like, period, is as close to the intrinsic value as we can get.
Yeah, to that point, as in to zero intrinsic value on either side.
Because then it's a volatility trade.
And in this situation, that would just basically be, it would be awesome if the contract we're trading at 280.
Right.
Because then what would happen is you might have a little bit more premium than the $7 because this is out of the money by a penny and a half. So as it gets closer to being in the money, you know, you're going to have to pay for that. But realistically, it would be a cheaper trade combined when it's at that price point.
Yes.
And let's just see how, I feel like, you know, they're going to line up pretty similarly, you know, because there hasn't been a dramatic move in natural gas where they're all going to have kind of similar setups. So that was the noon setup, just to give an option. Here's your 11 a.m. Things might change a little bit, as you can see. Instead of 22 on the bearish side, you're paying 20. Instead of 7 on the bullish side, you're paying 6. The difference being you only have until 11, so you have a half hour after the news breaks.
Right.
Until instead of 12, so that's where again you'd have to make that decision depending on what you're expecting. Do you want to pay $26, 2.6 pennies, or do you want to pay $30 and have till noon? And then just to finish up kind of some of the comparisons, going to be a very similar daily 8 to 2:30 and identical on the daily. So, you know, something to keep in mind. The other side of that, you can always just take one of these trades. This is where if you really have a feel for a bullish pop or something right on the news, you know, quite a trade if you're really directionally biased, where you're putting up less than half a penny, right, in terms of getting in there 2806.
Or even on the bearish side.
I agree.
You know, what happens on the bearish side, yeah, you're putting up 20 bucks, okay, but the bottom line is that, well, 22 is your maximum loss.
Right.
But what you have is that you're already in the money, so...
Yeah, you know, if the contract expires where it's at right now, right, 278.3 we'll call it, you get $17 of that back. So you're kind of just paying the $5 in premium.
Imagine that. And
you have profit potential down to 260. And if you get the volatility that's kind of crazy on that number, you're capped out at 280. It is.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 32, NASDAQ's down 46, S&Ps are off 6, gold's up 8.20, silver's up 2 cents. Come right back. Welcome back, folks. Dow right now up 40, NASDAQ down 40, S&Ps down 4.5.
And there's our natural gas number, rising 63 billion cubic feet for the week. And to jump back to the chart and see how the market is reacting, get down there. Nothing too dramatic so far. So we're trading about 278.5 coming into there. And just ticking around a bit, we'll get the raw numbers on that. Climbing a bit, 279 approaching. Yeah. But again, we would have needed to recalibrate things, you know, between 2.5 and 3 pennies, call it. So about 277 on the downside, 283 on the upside. Well, we'll give it a few seconds. We might be there, man. We'll see.
But this is not the way that, if we had the volatility trade on, folks, this wouldn't be the way that you wanted it to go in the first place, because you need 283, and that and the gas market would be pretty hard to get.
To the upside, right?
Yes.
As in, you know, if you got to choose, you would want, because here's our break even on the downside, 277.
Oh, it was, yeah.
And to put things, you know, here's our upside break even. I mean, different worlds completely.
Sure.
Yeah.
Sure.
So we'll check back in, but not quite the move you'd look for right off the bat.
Welcome back, folks. You get some selling pressure in this market. We get the Dow down 40, S&Ps are down 15, NASDAQ is down 80. And if we go over to the natural gas, let's see. So
one more quick check. So these were the numbers that came out at 10:30. We said 63 billion cubic feet. You had the estimate being 61. Bloomberg survey 63. So that helps explain why you're not seeing too much of a reaction. Pretty much in line. And checking back on the numbers, we're sitting there right kind of where we came in.
270.
And again, though, to talk about, if you just made that bearish trade, just presenting situations, you know, possible hypotheticals.
Right.
The cool thing is that, yes, you would have lost the premium you were paying, right? Which is about $5 or half a penny. But all that intrinsic value you were paying for to the negative side is still there, which is kind of nice. Now, the only other thing I was going to mention here as well is that we're finishing up the show at 11 o'clock, and we have the oil numbers coming up. So a quick comparison on the oil, all right? So we'll jump through this quick, but we got crude oil. I'm just going to jump to the 12 o'clocks, all right? We're trading at 68.56 right now. We have a spread at 68.75. So again, we're pretty close. We're within about 20 pennies. This would be your bullish spread, 68.75 up to 70.25. A little bit out of the money, about 20 pennies. Similar $1.50 to the downside spread. You're selling the bearish one. This is going to have your intrinsic value, about 20 pennies, plus a little premium of about 12 bucks. Bullish side, out of the money, all just premium. And so you're looking at about $50. Or about half a dollar, 50 cents, that you would need away from 68.75, and you have until noon. Now, the thing to stress, you don't want to be trading the 11 a.m. expirations on crude oil if you're looking for a pop when the numbers are going to come out at 11 a.m. All right, that's why you want to get used to it. Download that demo account. We'll get those numbers at 11 o'clock for oil. Should be pretty good.
Stay right there, folks. We get the fast market coming up next. Then, of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.